Now speaking, Andy Malivoj, Vice President, Investor Relations. I am hosting today's fiscal 2023 third quarter earnings call with Chris McCann, CEO, Tom Hartnett, President, and Bill Shea, CFO. We will be referring to forward-looking statements and non-GAAP financial measures which are subject to risks and uncertainties. Reconciliations of these non-GAAP financial measures to the most directly comparable GAAP measures can be found in our earnings release. Now speaking, Chris McCann, Chief Executive Officer. Our third quarter performance reflects three trends experienced throughout this fiscal year: a cautious consumer facing macroeconomic pressures, gradual improvement in gross margin, and managing the business well. Popular Valentine's Day bundle offerings included flowers and Shari's berries, floral paired with confections, and Shari's berries paired with Harry and David wine. AOV increased 3.8% over last year. We focused on creating celebratory moments for St. Patrick's Day with its shamrock frosted cookies. We expect consumer discretionary spending to remain challenged and gross margin to continue to improve. We are investing in organic growth through product expansion, our online marketplace, and AI technology like Momverse. We have also acquired Things Remembered and Smart Gift to bolster B2B gifting capabilities. Now speaking, Bill Shea, Chief Financial Officer. FTD reported a third-quarter revenue decline of 11.1%, adjusted EBITDA loss of $5.5 million, and an after-tax non-cash goodwill and intangible asset impairment charge of $53.1 million. The company's gourmet food and gift basket segment had revenues of $147.9 million, with a gross profit margin of 24.6%. Consumer floral and gift segment revenues decreased 11.8% to $233 million, with a gross profit margin increased to 37.9%. BloomNet segment had revenues of $37 million and a gross profit margin of 42.5%. FTD now expects fiscal 2023 revenues to decline 8%, adjusted EBITDA to be in range of $85–90 million, and free cash flow of more than $75 million. Now speaking, Chris McCann, Chief Executive Officer. This quarter we had softer top-line performance, but improved margins and expense management efforts which helped to offset it. We are facing macroeconomic pressures of inflation, rising interest rates, and recession fears. Our goal is to provide options at various price points to maximize conversion and customer value. We're focusing on areas within our control and have mostly mitigated the top-line challenges through margin improvement and expense management. Our margins are improving due to lower inbound freight costs. The benchmark company analyst Dan Kurnos inquired, "Have you seen a right-sizing of offerings this year due to consumer pressure? How are you looking at the entire portfolio of your offerings to gain more market share while being mindful of efficiencies? What strategies have you implemented to raise average order value, AOV, and improve margins, such as bundle deals and cross-brand pollination?" Chris McCann replied, "You want to touch on there, please feel free." We've recently acquired Things Remembered as a tuck-in acquisition to our platform that provides personalization services for customers. We're continuously making improvements to the search, navigational flow and cross-merchandising of products in order to make it easier for customers to use. President Tom Hartnett replied, "Have we shifted our focus from product to customer personalization in order to provide more relevant products for different budgets and occasions?" Chris McCann replied, "I looked at the average order value, AOV, and determined it is a combination of strategic pricing, reduction in costs, for example ocean freight, as well as merchandise mix. Our customer base is broad and encompasses different ages and demographics. We have an objective to ensure a broad assortment of products with entry-level price points. We are also providing customers with the ability." The benchmark company analyst Dan Kurnos inquired, "Have you implemented any creative strategies to increase subscription-like customers and cross-pollinate in the current environment, such as offering 10% discounts for future gifting occasions over the next 3 months?" Chris McCann replied, "I currently have over 20% of my daily revenue coming from Passport members, and that number is continuing to grow. I am also utilizing multi-brand/multi-category customer cohorts, which are providing me with further benefits and results." President Tom Hartnett replied, "Have we been successful in focusing on subscription services to increase customer engagement and improve analytics with machine learning?" Chris McCann replied, "Our reminder program has been one of our top-performing marketing programs and customers are now proactively entering additional dates into our database for us to remind them about. This new level of engagement is expected to give us a strong conversion rate on the reminders." The benchmark company analyst Dan Kurnos inquired, "I saw an improvement in margins and received helpful information about color. Did I get the answers I needed to my questions? Sidoti & Company analyst Anthony Lebydzinski inquired, can you provide a general sense of the trend lines for Passport membership, such as new members signing up or renewals? Are there any numerical data or dates you can share since you don't give out specific numbers on a quarterly basis? President Tom Hartnett replied, have Passport customers been a reliable source of revenue compared to our multi-brand customers? We have seen 20% of our revenue come from Passport customers and they have held up better than the overall customer trends. Sidoti & Company analyst Anthony Lebydzinski inquired, I have seen the most success with strategic pricing initiatives in which areas of the business? Chris McCann replied, I have seen the most success on the food side, particularly with higher-priced items. Pricing increases on lower-priced items like Personalization Mall are harder to get, but when prices go up over $7,500, it is possible to get a couple of dollars more. This strategy works best with customers who have higher household incomes and are less affected. Bill Shea replied, during the quarter, I implemented strategic pricing strategies in the consumer floral and gifts and BloomNet segments, resulting in increased margins. Sidoti & Company analyst Anthony Lebydzinski inquired, do you feel confident about your ability to refinance the term loan that is maturing in May 2021, given the current banking climate? Bill Shea replied, I am working with our syndicate group and J.P. Morgan, who leads the group, to finalize our discussions. We have been making progress towards this goal since the beginning of December. Noble Capital Markets analyst Michael Kupinski inquired, I would like to know how much of the improvement in gross margins was due to pricing versus freight cost? Bill Shea replied, I estimate about half of our cost savings to be from pricing on BloomNet and floral products. We have also strategically lowered ocean freight costs, however the full benefit will not be seen until fiscal 24 due to inventory bought at higher prices. Chris McCann replied, I am expecting to improve gross margin in Q4. Noble Capital Markets analyst Michael Kupinski inquired, in the last quarter, our company had an extra week in which we. Bill Shea replied, I estimate that the impact of this is approximately 1% for the year and around 4% for the quarter. The total impact is estimated to be between Noble Capital Markets analyst Michael Kupinski inquired, is the guidance for Q4 to continue the 8% decline in revenue similar to what was seen in Q3? Bill Shea replied, I calculated that there is an 8% guidance if the extra week of Easter is taken into account. This is beneficial for Q3 but results in a decrease of Q4's trend line. Noble Capital Markets analyst Michael Kupinski inquired, do I need to monitor any specific commodities in order to optimize my margins and take advantage of prospective moderations in commodity costs? Bill Shea replied, we have seen a decrease in liquid eggs and butter prices and a lowering of fuel prices. Commodities used by our food group, such as cocoa and sugar, remain at historical highs despite lower prices for eggs and butter. Fuel prices significantly decreased from the same period last year. D.A. Davidson analyst Linda Bolton-Weiser inquired, did you mention higher promotional activity in the food business, such as pricing competition from competitors? Can you provide more details on what is going on? Bill Shea replied, I have discussed in previous calls that due to the soft consumer market, we need to be more promotional on certain perishable products to move through inventory and avoid taking inventory write-offs. Tom mentioned that we have price points for all consumers at various times and that we need to be more promotional. The main promotional activity is related to moving inventory. D.A. Davidson analyst Linda Bolton-Weiser inquired, I asked about lower advertising costs year over year, to understand if it was regarding digital advertising or if there was more information. President Tom Hartnett replied, have I been successful in increasing efficiency for our advertising dollar, leveraging existing consumers and acquiring customers with the best lifetime value? Bill Shea replied, Linda, Bill reported that a strategic initiative this year was to reduce inventory. At the end of Q3, it was $191 million compared to $215 million at the same time last year, a decrease of $25 million. This should accelerate through Q4 since last year they were building inventory due to supply chain challenges. By the end of this quarter and next fiscal year, they will be in better inventory position than a year ago. D.A. Davidson analyst Linda Bolton-Weiser inquired, can we leverage higher volume buying by having both Things Remembered and Personalization Mall under one roof? We have seen some early successes in offering appropriate products from the Personalization Mall brand to the Things Remembered inventory, and conversely, merchandising Things Remembered products on the Personalization Mall brand. The average order value for Things Remembered is $20-$25 higher than Personalization Mall. Chris McCann replied, I have identified a cost merchandising capability between two brands, Tom and Things Remembered, with the goal of the latter playing in a higher category than personalization mall. This is made possible through leveraging an operating platform that has. D.A. Davidson analyst Linda Bolton-Weiser inquired, I understand that Paul was listed as a creditor for Bed Bath & Beyond with an $11 million amount. Is there any way to explain why this might have been an erroneous representation? Bill Shea replied, we had a $2 million exposure with Bed Bath & Beyond through Paul in the second quarter of this year, which we fully reserved for. We stopped doing business with them after that and no longer have any exposure with them. We are unsure where the $11 million came from. Noble Capital Markets analyst Michael Kupinski inquired, can you provide more information on capital allocation related to free cash flow? Chris McCann replied, I have invested in my business, resulting in a strong position. I am looking at M&A opportunities like Paul and Things Remembered to return value to shareholders. Additionally, I have an annual stock buyback program to manage share count and I continue to search for ways to maximize shareholder return. Noble Capital Markets analyst Michael Kupinski inquired, I am curious about the current mergers and acquisitions, M&A, environment. Do you think there are attractive opportunities out there? Chris McCann replied, we are actively evaluating a list of companies for potential strategic advantages, but will need to assess their valuation before making an informed decision. Chris McCann replied, I appreciate both Rocco and everyone for attending this morning. I encourage everyone to show their appreciation for the moms in their lives, as well as checking out 1-800-Flowers Momverse product. It's an opportunity to create a song, poem, or limerick for your mom and have some